just add it, multiply, divide this and multiply it. You have so the equation is of feature activity is 3,160. Now let's now allocate it equally to each department. Department A, Department B. That is 1/2. 1/2 times 3,160. We have 1,580. Then times 6, we have 1,580. That is that. That is the working on. We think we've done justice on that. So now we will now go to the question. Then another thing is that we have a rent and rate. Let me do some adjustment here. In the information sheet, don't forget we have prepaid. So I don't even add it. So and it has to be deduct. So it is not 2006. The 2006 is the one given in trial balance. So there is a mistake here. Because we are given rate of 2, and that's why one has to be very careful when you are doing attention. You must be up and doing. So rate of 200 were prepaid. So prepaid has to be deducted from the rate. So there is a mistake here. So let's deduct the rate prepaid from the normal rate. So the total rate will be 2,400. That is that. So you can 4/5 times 24. 4/5 times 24, we have 9,200. Then 1/5 times 24, we have 480. So there is a mistake. So it is not 2, it is 26, but we are given additional information of 200, which is a prepaid or advance. It has to be subtract from this, which we have the rate of that year. So I think I've done justice to this. So now let's now go to the question, which is the trading profit and loss, the department trading profit and loss, and see how we'll prepare this at the end of the day. Now let's now rewrite departmental department trading profit and loss account for the year ended 31st December 2000. So don't forget we have a department A and we have department B. So the total. Then here we have department A, department B, we have a total. So now let's now start the preparation. We have the opening stock. Look at your trial balance. We have a closing stock, that of A, department A, we have 710, then B we have 765. The total is 13,360. Now the purchases. We have purchases, which is 240. That of B is 21,800. We have 641, which is the total. Now we have a carriage inward. We add carriage inward to it. 300. We have 100. The total is 400. I don't think we don't have any transfer in the information. So if you add transfer, then we have to deduct it and add it. So we are not given transfer here. So let's add it. Now we now let our closing stocks. Don't forget our information. Closing stock is given in the additional information. A is a 1, is a 15, or 06. Then that of B, you have 11,416. Then the total is 26,000. Now, having done that, we less it from the closing stock. So let's less it from here. We have 49. You can see that it correlates with that A and B because that is the total. So now we have wages. The reason why it is being done here is that when you look at the question, we have something like these wages that they are telling us here is a form of indirect wages. You can classify it as indirect wages. So that is why it is put under. You decide to put it under here, under expenses, or you decide to put it directly. Since it is classified as salaries and wages. Salaries is the expenses, is the indirect expenses, but wages is we call it the direct expenses. That's the reason why you have to classify it under here. And if you are familiar with your manufacturing account, you see that that is the way we do it. We have 3,000 here, so the total is 6. So we add it. We have 211,134. Then we have 459,738. Now let's go to the other side, which is the credit side. Sales. Our sales for A is 320,118. Then we have B is 287,62. So the total is 66780. So let's find the difference. This is the cost of goods sold. Now let's let it. You have our gross profit. So you find the difference of sales and cost of goods sold. We have the gross profit at the end of the day. So that means sales is greater than is more than cost of goods sold. We have gross. But if cost of goods sold is greater than the sales, we have a loss. But here we have a gross profit. So let's balance it. We have 28762. We have 78. So that is that on the trading. Now let's go to expenses. That of expenses, and those workings we've done. Let's begin to treat them in the expenses. So let's bring our gross profit. Let's bring our gross profit down. Let's bring it down. We have 81414. We have 59628. We have 141,042, which is total. Now let's start with salaries. Let's start with salaries. Looking at these salaries, that of A is 21,605, and that of B is 18,955. So we have The total is 40,560. Now that of office expenses, we have 19191682. So that amount to that total to 3,600. Then we have a rate. Don't forget rate. That is that of department A is, and that of department B is 480. Then we have 2,400. Then we have advertising. We have advertising. Advertising is A is 172, while B is 1028. That total 2,200. We have a loan interest. Loan interest A, because we are told here to share it equally. So, and it is being done in the calculation, in the workings. It is 3. We have 640. Then we have insurance. We have insurance. So our insurance is 902. So these are insurance. We have 902, and we have B. We have 226, which is 1128. Then we have depreciation. Depreciation on fixture and fittings, which is F and F. So we have 1580. Then we have because we are told here that to be shared equally, which is 3160. Now that is that.